Okay, so we discussed last week the importance of recovery, and we discussed the monitoring, supervision, follow-up, and we try to identify the warning symptoms, and we try to identify the causes for failure, why the facilities are going bad. And today we are going to start the recovery options. What are the options available for recovery? Uh, I gave you in the last week schedule the structure, what are the options available for us, and how we can attend for that. Basically, if the market viability is positive, that means the product can be sold, there's a market to sell. Secondly, customer is agreeable for any alternative or change, positive. And collateral also viable, is available. If these three parameters are okay, our best option is going for rehabilitation of the customer rehabilitation. So let us discuss how we define this, the default, and identify the sick business. Some of these slides are actually Indian scenarios, right? Some are not actually practically, we are not using certain parameters, but we can learn something from that parameters also. Security business, business securities unit which fails to generate internal surpluses on a continuing basis and depends for its survival on frequent infusion of external capital. Unit, the definition is given, a unit or a business, it continuously could not generate any surplus. Generate any surplus, that means cash flow surplus. If the surplus is not sufficient, then that business unit is considered as a sick unit. It's a sick unit. And mostly they are depending on external capital. External capital mean not the customer's equity, but bank loans. Bank loans. Sometimes you may find this external capital is the considered by the banks are not in a long-term basis. The problem is long-term. They are giving the solution is short-term. That's the problem we are. These units have been continue to be becoming sick. If the company unable to pay its debts as they become due on the normal course of business, this means payment to the creditors, payment to the other liabilities, short-term liabilities, specifically the salaries and other expenses could not meet, or value of the company liabilities are greater than assets. If the overall picture, liabilities are greater than assets, then it continues considered as a security. So we summarize why the customer, the reasons for sicknesses. Reasons for sickness start from bad initial planning. Most of the businesses, the initial planning is weak planning. Lack of resources for financing. Resources are not sufficient. All the businesses started, the sufficient resources are not available. Other is mismanagement. This is a very common factor. Mismanagement. Lack of honest interest or commitment. Sometimes you may find certain business fails because the owner's interest is not there. This happens mostly when the external equities or external funds are more greater than the the owner's equity, then his interest is becoming low and low. We have seen number of businesses fail because they are not taking much of interest because whatever earned by them, it is gone out from the organization, business, toward the servicing of external debts, external borrowing. So sometimes customer may think that why should I sweat so much and earn, entire things taken out by somebody else. His interest may be declared. Therefore, specifically when we analyze customers' business, if there's a very important ratio is the solvency ratio. Solvency ratio, that is equity and external funds, relationship between these two. Solvency ratio is the most important thing you have to understand. So if the solvency ratio more than 50%, ratio is more than 50%, debt equity ratio more than 50%, customers' interest may be gradually decreasing. Then the change in government policies. Suddenly government policy changes can create a business completely collapse or default. Yeah, we are experiencing this in Sri Lanka now. The change in government policies in the environment. That is badly affecting the entire businesses. And technological change. It's very important we have to understand. I discussed it earlier also. Technology is changing very rapidly. Technology is changing very rapidly. So the machinery is used for the manufacturing. The technology changes create problem because the profitability may be affected. For example, if a new machinery is innovated by a company as a vendor, put it in the market, and it has a more sophisticated the features as well as low-cost production. Using that machinery, production is very low cost. Output is more than the existing ones. So what will happen? Without any change, although the machineries are running condition, good condition, still have a period to service according to the vendor's certificate, which is over 5 years. In 2 years or 2.5 years, 3 years time, that particular machine getting technically obsolescence. Technically obsolescence. So therefore, bankers, when you lend for backed by machinery, always see it is less than 3 years. If we go more than 3 years, we are facing difficulties. Because if technically obsolescence, if a customer defaulted, we have no collateral to recover. But the machinery cannot be, there's no market to sell. Therefore, it's technically obsolescence and we are facing difficulties. The intense competition. Even the number of competitors are great. When the competitors started competing with the prices and the quality, that will be one of the other reasons businesses can fail. And production inability, production could not produce the required quality and the quantity. These are some of the sickness reasons why the businesses will go bad. So we handle the problem loan accounts classified by classification, early defaulters, and difficult customers, customers with genuine problems, doubtful, account inoperative, dormant, or borrower disease, or under legal action of finding a procedure, bankruptcy procedures. So the customer in each category, depending on the category, our approach for recovery has to be decided. Process of dealing with problem loans. Determine the loan is a problem. That is, it is either going to be defaulted or defaulted already. Determine the nature and seriousness of the problem. What is the depth? Right? After granting facility, within 6 months, if it has fallen due, then the problem is very serious. because your credit evaluation is somewhat wrong, maybe. Within 6 months, if you solve the problem. So depending on the nature and the seriousness of the problem, we have to find a solution. Analyze the bank position, identify the available options, and evaluate them. So we are going to talk about this. What is the bank position? What is the risk of the bank? And what is the options available for us to go ahead? Then draw up a plan, including how to deal with the contingencies. This is what very important. Whenever customer dealing with problem with a loan is getting problem that is defaulted, then we have to draw up a plan how to uh, mitigate the risk, how to do the recovery plan, recovery measures, and if contingencies, anything happen, what is the alternative? So there should not be only one part. There should be more than 2 or 3 parts of the drawing plan. Always we should have alternative plans also. Implement plan and monitor the results. This is what we are trying to do it now. Determine the causes for borrowers' difficulties. We started last week. Identify the problem. Causes for default. What's the problem? Actual customer's problem. I told you last week that if you solve the customer's problem, our problem is automatically solved. Our NPA will be automatically solved. So therefore, try to understand very carefully without generalizing the problems. Without generalizing the problem. Identify specifically what is the problem is. Each case by case. You know, most of us bankers, when the customer defaulted, we generalize terms. Customer defaulted reason is cash flow is weak, or he has some problems, or his sales have been declined, or his production has been declined. Those are general terms. We have to find out why the causes. Disregard previous data, investigate and construct current picture. Right? Most of us what to do, previous information, previous data will take, and we try to investigate on that, not the current situation. So first of the current picture, what is today's position? What is the environment picture? So analytical tools we have discussed during this course. Obtain updated figures and projections. List of reports desired from the customer. Important thing is data. So if you go for a recovery program, the important thing is prepare data, collect the data information, and do certain projections based on the data. And from that, we may be able to understand whether the customer can be put back to the business or what action we should take. Review documentation to ensure that they are in order to determine the bank position and options. Review documentation. This is the most crucial part in our banks. Our documentations are weak. I think we had discussed this in the earlier session also. Most of our documentation are weak. We take the documentation on the name saying, just to get the signature only the customer and the customer. So when it comes to defaulted, when you're going to sue the customer against the charged documents, we may find documents are either incomplete or inaccurate or not according to the legal requirements. So we are finding difficulties. So ensure that we read the documentations are and what the banker push. Assess collateral value. What is the marketable value? Assess the which marketable value, the collateral, whether you can sell it, book, not the book value, right? We have to get a valuate report on what is the market value, whether we can sell in the market. What are the obstacles to sell in the market? That has to be developed. Liquidation versus going concern, liability. When the business is going to be concerned, going concern mean going to be continued if what we discussed earlier, first slides I show 3 parameters. These 3 parameters are okay, we'll continue the business. Going concern. If not, we have option, go for liquidation. Liquidation of assets and try to recover. Ascertain attribute of the other creditors without revealing the bank's concern. Let us see who are suppliers. What is the supplier's idea about this customer? Supplier's concern about the customer, right? Without telling the bank's position. Seriousness of the problem loan. The serious problem loan is compounded by defective documentation. In and out, we are telling this. Defective documentation is the most crucial part. Why the documents are getting weak, defective? Whenever we go to file action against a customer using the charge document, always we try to put the blame on the people, the legal departments, on the lawyer, prepare the documents. No. Main problem with you in the branches. Why? Documents are executed by the branch people. Although the document prepared by the legal department, it will be executed by the branch staff. So therefore, we make a lot of blunders and mistakes. So that has to be cleared by the legal department, say later on, when you try to file action against the customer. The other factor is we have to keep in mind that if our documents are weak, defective, definitely customer will take the advantage on that. He will take advantage on that scenario. Try to maximum possible, try to default and not to pay, because they know that banks in a bad wicket. We have our prevention techniques and the methodology and instruments are weak. So he can take advantage over that. Most of our legal action failed because of this. Right? The other one is most very important part. Poor credit evaluation. What are credit evaluation? Is very important. Poor credit evaluation means we are not the evaluation criteria only mostly based on the financial analysis, not beyond that. If you number of default facilities, when you look at the evaluation procedure you have done, most of the bankers find that only the financial evaluation. External environment, external that's market evaluation, technical evaluation, collateral evaluation, that's poor. Uncooperative, dishonest borrower. Definitely, when the above two are affecting defective documentation and poor credit evaluation, definitely customer will be uncooperative and he will be turn away from us. So we have to difficult situations. In mistakes and carelessness of the bank. Now this word I am not agreeing, although these bankers use this word mistake. In our banking vocabulary, there is no word called mistake. Right? අපේ පාරිභාෂික ශබ්දමාලාවේ වැරදීම කියන වචනේ නැහැ. No word called mistake. Any mistake, it will be treated as two ways. Either negligence or a fraud. Negligence or a fraud. There is no word called mistake. It is negligence. Or fraudulent intention, fraud. Okay. The carelessness is not a term for us. we had to be 150% perfect. 150% perfect. And keep in mind that. Then issues in property valuations, not only property, any collateral valuation. This is very, very common factor. We know that most of the property valuation, the valuers ask the customer what is the loan amount. To match the loan amount, they give the valuation. In case of a default, if you go for file action, that value is right less than the market value. So always we have to recheck any valuation report brought by a valuer. And just when you inspection, we try to find what is the market value. Just ask from nearby people, those landowners, about what's the market price today. So we can get a gauge what type of issues we are having. In other external factors, political factors, social factors, economical factors, are some of these things are affecting our own decision. What are the measures to handle the problem loans? In handling the problem loan, there are three broader categories: strategic restructuring, financial restructuring, legal action. And the other one is rescheduling. That is also a very simple solution for recovery of problem loans. Strategic restructure has to be initiated by the company itself, while the financial restructure has to be initiated by the bank. We'll just discuss a little later on. Right? These two, what is the strategic and financial restructure? Look at the balance sheet of a security. What the position of the balance sheet. Current liabilities, short-term borrowings will be high. That's the old the overdrafts, especially TODs, are very high. Right? There would be some unpaid strategic liabilities such as wages, electricity bills, utility payments, taxes, right? For a period exceeding 1 year, or for a longer period, really unpaid. It will create unpleasantness among the staff, especially wages and bonus are not paid. The staff will get unpleasant. It will create deterioration of the business. Supplies of raw material would remain unpaid for a long period. You may see the creditors' number of days of creditors have been increased. Suppliers, raw material will remain unpaid for a longer period. That means creditors' payment period has been gradually increasing. That means we may think it's an advantage to us. Because when the current liabilities are not paid, right? Current liabilities are not paid in time, it will affecting a positive reaction on the cash flow. But at what cost? But at what cost? When suppliers are not paid in time, they may not give material goods or inventory future, or increase the price, including the cost of finance for them. Then that will impact, in turn, affecting the profitability of the business. Considerable amount of contingent liabilities will be exit, mostly due to lawsuits. Contingent liability outside balance sheet. Then term liabilities, non-current liabilities, loan installment remain unpaid for a period exceeding 1 year and would be continued. Where loans are, all the term loans are showing in the balance sheet, but those are in non-performing section. Right? Gradually reducing and even negative equity. Why? Equity gradually reducing or going negative because the losses are increasing, equity will be deteriorated. Losses will be absorb the equity. So finally, the equity or the share or the capital is deteriorating. On the other hand, current assets would be stand depleted. Now you may see the current assets, what are the items? Dead stock and non-moving inventory, right? Dead stock means obsolete stock and not moving inventory. The figures shows where book value shows, but it cannot be realized. It cannot be sold. So we have to remove those things. Then only can be purify the asset. Overdue, let's mostly irrevocable. Return payment period. For example, debtors life. What do you normally work out? The debtors. How long debtors are in the books? Payment period. As the debtors payment periods are increasing, tendency of doubtful debts and bad debts are increasing. The doubtful debts are bad debts are increasing, although debtors show a asset position, part of that is liabilities. Why it is not recoverable? Then negligible cash and bank balance. Bank balance is negative, or either it is no cash balance, it's in the overdraft figure is there, current assets. Then fixed assets disappear, inflated and non-realizable. Right? Fixed assets will not generate any income. It will help to stabilize the business wealth. Sometimes you may find by revaluation of asset, it can be inflated to avoid window dressing of a balance sheet. Intangible assets, those including losses and capitalized expenses, would be prominent. Okay. So these are some of the factors we can see in the balance sheet of a customer. So let's see what is rehabilitation. In general, SIC business unit is defined in terms of its capacity to generate internal funds. The SIC unit fails to generate internal surplus on a continuing basis and depends on survival or frequent infusion of external funds. Hence, the need for detailed discussion of the rehabilitation is very much felt. Now, what is SIC business we define, and therefore, what is rehabilitation is mean. What do you mean by rehabilitation? Simple term, put the customer back to business. Rehabilitation is put the customer back to business. What is the objective of rehabilitation scheme? To enable the unit to operate at a profitable level. Convert the business, operate at a profitable level. Look for the problems. Problems are short-term nature. Okay, rectify those things and can be converted into a profitable business. To adjust irregularity in the account, if any, according to the phase program. Right, some of the assets having inventory stock list. You take the stock list, you may find there are a lot of obsolete stocks. Those stocks are not moving more than 6 months. They are in the stock list. So those are, although asset is showing as an asset figure, but it is not paying back. Similarly, debtors. Age analysis important. But debtors are more than 6 months, probability of recovery is very doubt. So you have to paste out those things. Thus, the rehabilitation scheme involves 2 aspects. Rehabilitation involves 2 aspects. Preparation of feasibility report before implementing a scheme and careful monitoring of the performance of the unit during the nursing period. Prepare a rehabilitation scheme and the reschedule, restructure, or business turnover. These are 3 areas we are going to discuss. Rehabilitation scheme. And when you're implementing that, you have closely monitor during the nursing period until the businesses take off on the ground. It's very important. when you prepare a rehabilitation scheme, assessment of feasibility of the project. You have to carry out a feasibility study about the business or the project. Whether it is feasible, it is the market. The customers, the two assessment which I discussed earlier, main important part is the market analysis. The feasibility, there should be a market to sell the product or the service produced by the customer. If the market is failed, whatever action you propose may not be practically applicable. Assessment of additional funds. Most of the businesses facing these difficulties. This is part of the bank's fault. Part of the bank's. Without proper assessment of the customers' their funds need or the equity need, or sometimes, most of the time, banks are offering what the customer wanted, not assess what they actually need. Actually need is maybe either higher than what the customer expected, or sometimes you may be over financing. Both are dangerous. So have a proper assessment with what additional funds needed, what purpose these additional funds are needed. When we pump our money in the rehabilitation projects, additional funds we then give to customer to revive the business, certain, especially noted items are there. We should not invest in assets which are unproductive. Right? Which are unproductive. We discussed this in the working capital finance. Can you remember? Customer tried to pass his what you call unproductive assets to the bank. That is one of the things, key things is in the inventory, obsolete goods. When you're pumping additional funds, the additional funds should not be what you call finance that portion of the obsolete goods. Similarly, debtors. Banks should not finance for bad debts. Okay, so additional funds needed, very carefully you have to work out when it comes to rehabilitation. Preparation of cash flow estimate should be justifiable. The cash flow. Cash flow is one of the important instrument for the banker to determine of the customer's repayment ability. Okay, we discussed this in the last sessions. Okay, then marketing arrangements. How do the marketing arrangements are going to do? What are the marketing arrangements? That is, what are market segments? Will the market segment to be expanded? Will the customer having any market segment which is not paying well? Okay, this thing we have looked into anyway for rehabilitation. Arrangement for recovery of overdue debts and disposal of unwanted assets. Right? This is the other key factor when you go for rehabilitation. Clear up the balance sheet. That's the most idea of this. Overdue debts are there, that is the debtors having age analysis more than 6 months. Remove those from the books. Give it to the P&L or try to recover giving a discount to those customers. As proposed the customer to give discount to those overdue customers and try to collect whatever possible. That will help to increase the cash flow. Then unwanted assets. It can be fixed assets or current assets. There are assets which are not saleable in the near future. So we can put a lobby sale and dispose the inventory, unproductive inventory. Similarly, if the assets are there, it is not using, or it is not the value will deteriorate the picture of the business. I have to dispose those things. Okay, arrangement made with other financial institutions or equity holders for additional funds. If needed, equity as a customer should be able to put additional funds. Let's see the customer having any ability to put equity further. Otherwise, bank has to pump it. Arrangement for management performance is a very important part. If you find the business has been defaulted due to the management weaknesses, then take over the management. It's one of the arrangements we can do under the parade. Take over the management, bank will run the business if the other factors are viable. Market is viable, collateral is there, only the management weak. So take over the management by the bank, appoint somebody management team to run the business, and once you recover the facility, then give back the business to the customer. This is one of the ways of handling the rehabilitation. Right. So we discussed earlier rehabilitation to revive a sick industry or a project or a business to operate viably. What are the rehabilitation things available? Rescheduling, restructuring, and business turnarounds. Let us discuss a little detail about what are these three items. Rehabilitation process can be termed as a measures taken for recovery, retrieval of industrial unit, enterprise, enabling it to meet its expenses, liabilities, and becoming profitable. Okay, the rehabilitation is that we discussed earlier, put in summarize. It's the measures taken to recovery or retrieval of the industrial unit, enterprises, enabling it to meet their expenses and liabilities and becoming profitable. The process followed by each lender will vary, but generally it involves trying to change certain conditions to help the borrower to repay the loan, such as increasing repayment terms. Of this, right, the process follow each lender will vary, but generally it involves trying to change certain conditions to help the borrower to repay the loan, such as increasing repayment terms. Now this is called rescheduling. If this does not work, then assets may be seized and case of secured loans and loan recovery against may be enlisted. So best option is to see whether customers' repayment ability to be increased. It is not increasing the income. Okay, don't misunderstand. In recovery, most of us putting this as a proposal, asking customer to increase his sales. To increase his sales, we had to find out whether there's a market to expand his sales. Market conditions, that has to be looked into external factors before we propose such a recovery plan. But on the other hand, we can reduce the repayment installment by extending the period to match with the cash flow. That's what we need as the rescheduling of facilities. Okay, rescheduling of advances means granting more time or period to pay back the facility, matching with the cash flow or income and with same terms and conditions already agreed upon. There's no change in the conditions and the terms and conditions. Only extending the period and reducing the installment to match with the cash flow. That's called rescheduling, nothing else. Carefully understand, rescheduling is nothing else. Only extending the period by which reducing the loan installment to match with the cash flow is called rescheduling. Okay. Rescheduling of loans means to extend or add an extra time to your existing loan tenor. Right? Extending or add extra time to your existing loan tenor. Increase the period. Resulting in revision of your monthly installment amount so that the borrower may be able to pay a lesser amount each month. Okay, this is what expected. This is not that difficult. This is mostly what happened when at the time of granting the facility, the bank may have made a mistake, incorrectly calculate the customer's income. Incorrectly, specifically personal loans and small loans. Don't you think so? Even small business loans, not for the companies. When the customer's repayment ability is not enough, don't you ask the customer to bring some additional income source? Additional income source, bring some documents to prove that you have additional income, which is not existent, only a document you are taking to satisfy yourself. You are giving a facility going to be defaulted very soon because customer does not have sufficient funds to pay, but you are taking a paper document to say that he's having additional income. So we try to cheat ourselves, not the customer. These are some of the factors which are led to default. This can help the borrower by some time to adjust the repayment plan and also not default on their loans. So, one of the fundamentals of lending, cash flow based recovery. Cash flow based recovery. Need based finance, cash flow based recovery. Most important two fundamentals in credit evaluation. Cash flow based recovery. Cash flow no recover, not the profit. Profit will not pay back the loan. We discussed earlier. Okay. So, what is rescheduling? Urgent deadline, lender, borrower. Lender is a doctor who is to save the patient. Patient is given saline. It's rescheduling. May involve concessional rescheduling, reduction in the size of the debt. Right? Now, for example, if a customer may have been paying the loan for some time, but suddenly he have declined, stop payment. Now, if you find that the customer's income is not sufficient to pay the loan, you reschedule it. Take the loan amount, existing loan amount, grant a fresh loan with a reduced installment to match the cash flow. That's very easily handled. Okay. Lender may need to accept that not all the money will be paid back. Definitely. You'll understand that. This is not fully settled. There may be instances, the parts. So, part settlement. So, we'll understand that. We try to get maximum, not within a shorter period. That is not our business. Aim is to provide the borrower with breathing space, relief. Allow the customer breathing space. Allow, not to pressure the customer. On the initial stages, starting with these sessions in the recovery management, focusing on this. Allow the customer to understand the problem and try to help the problem, solve the problem. Not putting the customer more and more difficult situation. Changing the original terms of the debts. That is the repayment period. Prolonging the period during which repayments are collected. Right? Period which repayments are already collected. When the rescheduling, either we restructure, rearrange the loan repayment depending on the current cash flow and reduce the loan installment, which can be done because the original loan has been now paid a portion. So take a new loan and adjust it. Reducing the monthly repayment amount. One of the factors, very important. reducing the monthly repayment amount by which customer can be helped to is a part of the rescheduling. Negotiating a new loan, restructuring is also part of that. Now, specifically, this can be applied practically to some of the customers, especially leasing facilities and hire purchase facilities. Although the hire purchase in the books, I have not seen any bank or any lending institution, financial companies offering this hire purchase instrument. They are not offering hire purchase. Always try to do a lease facility. Okay, if the customer paid the lease, install the rentals up to certain period, now the customer having difficult situation. Do restructuring. Do restructuring. Give a fresh lease facility for the reduced existing balance and reduce the installment or the rental and extend the period from that time onward. Customer will happy. Your recovery will be happy. These are the practical issues we can tackle the cases easily. Okay, right. When the borrower is having difficulties keeping up with his or her debt repayments, and the lender believes that changing the arrangement might give the debtor some breathing space, thus improving the chances of getting its money back, it may agree to rescheduling, that is, renegotiating the terms. Okay. So if we find that customer had difficulty in repayment due to insufficient cash flow, the best option available is to go for rescheduling. Now, for example, you give personal loan to a customer, we are taking into consideration his salary, and some banks are taken his other benefits also in granting the facility. It should not be taken. Only the salary and the statutory, the statutory allowances only should be taken. Overtime, bonus, these are not the repayment source. Okay. Some banks take all these things. I have seen one of the proposals that the customer says he is getting a 2 month salary as bonus. The bonus is getting paid only December. So bank has divided by 12 and taken that 1/12 for the monthly income and work out the repayment plan. Can you recover? Can you recover? Definitely the loan went bad. These are some of the what you call we are not understanding what is the real requirement. So when it is salary employee, only the salary and statutory allowances, that is a CLA, married allowance. These two are statutory allowances. You can add. It will not change. But all other allowances are changing with the position, with the transfer. Now this customer has been, a person has been transferred to some other department where, or the bank, or he has left that company and gone and joined another bank company where that bonus and other payments are not being paid. Now what is the position of recovery? So we have to reschedule the facility to match the current income. Now this is where we have to carefully understand. It is, the recovery is not sending a letter to the customer and telling, oh no, before pay such and such amount. It's not a recovery at all. The aim of debt rescheduling is to provide the borrower with the relief or breathing space when required due to or perhaps an economic recession, job loss, illness, or some other unforeseen personal event. Right? Take into consideration external factors which have affected customers' default and try to rectify that. Okay, that's all about rescheduling. So what is rescheduling is put it in brief, extending the period, match the cash flow. What are the circumstances? Right? With a brief relief required, sometimes economic recessions, job losses, illnesses, or some unforeseen personal event or business collapse due to some sort of a external factor. We know that in the recent past, in this corona epidemic situation, most of the business has been affected due to lockdowns, and now most of the business have been affected due to the import ban. Right? So we know that these things. So now these facilities has to be restructured. Rescheduling will not help. We have to go little beyond that. It's called restructure. Now we'll go for that. What is restructuring? Now rescheduling of advances needed when it's underfinancing. Underfinancing because of the weak evaluation. Most of the problem here is the working capital inadequacy. When we calculate the requirement of the customer need, the working capital need has not been correctly worked out. That's why we paid much attention in one of my sessions to introduce how to calculate the working capital. Very, very crucial. Wrong period. Always try to be period within your delegated authority. You are boxed in that 3 years or 5 years which are given by the management to you. You are not going beyond that. If you go beyond that, you can reduce it, installment. But you are not ready to do that. Not matching with the cash flow. Therefore, it's not matching with the cash flow. Then cost escalation is another effect, especially construction and long-term usage of funds. The cost escalation, we have to keep a reserve when you account for calculated for facilities. The infusion by stakeholders. Right. Rescheduling, which is sometimes called loan modification, may be in the form of a combination of low interest payments, but a longer period during which they are collected. Period may be extended, reduced loan installment. Arranging for a later repayment date. Okay. Later repayment date. Now, moratorium is one of these factors. Postponing the payment. Lowering the interest payment, but raising how much eventually has to be paid. Lowering the interest payments, but raising how much eventually has to be paid. Negotiate a usual collect debt restructuring. When you go for rehabilitation, rescheduling is needed. Okay, let's go for this restructuring and refinancing. What is restructuring? Restructuring and refinancing. Slide put a arithmetic here, right? It is there are two restructuring proposals we discussed in the earlier slide. It is strategic restructuring and financial restructuring. Strategic restructuring we discussed earlier. That is, the restructure has to be done by the customer, borrower or the defaulter. The borrower has to restructure his strategical approach to his business. Retrenchment, closing down or scaling down the operations. This is one of the strategic restructuring, where the customer can reduce their close down certain units of the business which are not giving sufficient cash flow or income. Or retrenchment, the staff may be reduced according to need. Now, this is what we needed in most of our government institutions. No? Strategic restructure is needed to cut down the losses. Right? Consolidation of operations. Operations can be consolidated. For example, if a business having 2-3 units independently working, so independently they are spending for certain operational activities. It can be consolidated and for the units depending on that. That's one of the customer side. We have to do that. Customers understand and rearrange the operations. Divestiture selling part of the business. Selling part of the business. Sometimes certain units of the business selling may be part of restructuring. Certain customers, they have certain branches, closing down the branches also. Right? It's not operative, also the branches. Then new marketing strategies. New marketing strategies. And going for new markets and marketing strategies. That is looking for new markets. That means a new product, innovating a product for a new market, or innovating a new product for existing market, or an old product for in a different mode put into the market, changing the market strategies. So most of the large businesses applying these strategies. Okay, now can you see? One of the examples is Unilevers. Now Unilevers, when you put the Lux into market, time to time they change the wrapper, change the fragrance, change the way the shape. These are some of the marketing strategies applied to capture the market, to keep in the market. Then new organization arrangements. Organization structure may be rearranged. Certain areas of can be amalgamated, or some can be expanded. Addressing the management issues, very crucial. Then liquidation when needed, partly liquidation or complete liquidation. The diversification is not advisable at this juncture. Restructuring, strategic restructuring, the diversification of the business is not suitable. Then come to financial restructuring, is initiated by the bank. Bank has to do restructuring, rescheduling, rehabilitation, compromise settlement, enforcing collateral, if not finally litigation. So these are the options the bank can do it. So now what we are trying to discuss is these structures one by one. Okay, how to do by the bankers. Now rescheduling we have already discussed. Now restructuring is going to be discussed. Restructuring exercise refers to modification of principal terms and conditions of the financing loan, which may include change in the type of structure of the financing loan or other significant change to its terms. That restructure means rearrange the entire facility. Rearrange, modify. Right? If the defaulted, again, principle is that market should be viable, customer should be agreeable, collateral should be available. If these things are okay, the other option available is go for restructuring. Rescheduling is short term. Rescheduling is a short term approach, but the restructuring is a long term approach. Right? Modifying the terms and conditions, changing the entire loan will be changed. So restructure exercise may involve restructuring or conversion of the type or nature of the financing loan, such as overdraft to term financing loan, or from revolving financing to loan into non-revolving financing loan. Like the the structure of the loan facilities also may be changed. This exercise is enable customers to improve their cash flow and overcome financial difficulty. Our objective is under restructuring is to improve their cash flow based recovery, to overcome financial difficulties, to improve the cash flow, to have a surplus cash flow for our loan repayment. What are the things included? What are the factors included in restructuring? Right? Restructuring means change the entire credit structure in order to strengthen in the recovery program. Okay? Infusion of new capital. If you find this facility has been defaulted due to insufficient capital. Capital is not, there are two types of capital. Equity capital, that for permanent fixed assets needed. The other one is working capital. Second one is very important. When you are packaging a facility, you have to look into that. What's the customer's need? When you come to restructuring, should not go we should not go for expanding the fixed assets, but we can expand the working capital by which income can be generated, profit can be increased, cash flow can be improved. Right. So infusion of capital is by the way of equity capital. You can ask the customer to put more funds. This is mostly what happened. Banks ask the customer to put more funds because he had defaulted. He did not, because he did not have sufficient fund to invest in his business. Then we have to take over that part. The bank has to take over new financing. But of course, here now the problem comes with the policies of the bank. We have a conflict in these policies when you infuse a new loan capital into a business. It is very, very carefully handled because according to the policies of the banks, whenever defaulted a facility by the customer, when a custom facility is default under NPA, the delegated authority of the manager has been withdrawn to give another new facility for this customer. Therefore, we have to put a paper and get approval from the management. Now, these are the most difficult part. So we have to convince the management this customers need additional finance. And we have to show that new funds of the bank will not going to be the NPA side. So this is where the difficult part to convince the management. But anyway, you have to do that to continue this business. The business is okay, market is viable, customer is okay, then our part is put new capital as a loan capital. Second is rescheduling, extending the period. Right? So rescheduling is the second option under restructuring. We can include the period also can be extended. Then comes to securitizing of weak facilities. What are weak facilities? Overdraft TODs, letters of guarantees are given. Sometimes these facilities may not be fully secured. So when you go into restructuring, all these facilities rearrange and covering with a tangible security. If the customers have TOD and it has not been settled for a period, right? So that TOD and the letter of guarantee, what you call certain loans may be given with personal guarantees. Those are weak facilities. So which all these things can put into the package and covered by a tangible security. In the restructuring, right? The weak facilities securitized with the tangible security. important part we have to understand is after restructuring, right? After restructuring a facility, putting all this into one basket and securitize, no more TODs thereafter. Okay, there can't be any shortfall of cash flows of the customer because we have already taken into consideration the future cash flows of the customer, and if it's then we have to monitor whether that cash flow is worked out. These are the conditions we apply for restructuring. At least for 1 year, no TODs. Or if you need the customer further facilities due to some calculation error, go for a short-term loan with a suitable security collateral. Okay, then capitalizing of unpaid interest. What to do with the accrued interest? When it comes to restructuring, there can be accrued interest can be there. So we have three options. Three options we have. If the unpaid interest, we can add to the capital. Right? Unpaid interest, we can add to the capital and make it capitalize. Right? Now, there's sometimes customer may not agreeable for this. Why? Because he had to pay interest on interest. He had to pay interest on interest. Therefore, he may not be agreeable for that. But for a small amount, for a shorter period, and if we have accumulated, we may pursue the customer to capitalize the unpaid interest. But it's not a must. Second option is granting interest-free loan. This is a very common factor, very, very common is granting an interest-free loan. That accrued interest component converted into a loan, right? And we call this as an interest-free loan. Ask the customer to pay in installment 6 months or within 1 year, matching with his cash flow. Okay. Maybe if you're granting a second loan to the accrued interest, the original loan installment may not recover due to the cash flow constraints. Only the interest part can be serviced. So give a grace period for existing loan and recover only the interest and recover the interest-free loan first. Okay. Normal interest-free, although we call this as interest-free loan, we add a nominal interest to this accumulated interest for 5% or 6%, add to the interest-free loan and divided by period and you go to as an equated installment. Equated installment B. Third option is if the customer's cash flow is not sufficient to pay and it is going to be a burden on his part for our recovery program, restructuring, or any other recovery strategy that you are going to approach, the interest component is going to be accrued interest component is going to be a obstacle. We have the option of giving interest waivers. But most of the defaulters or customers, they are demanding for this concession. What is that? Interest when you propose this interest waiver to your management, you have to give certain solid view of yours about this fund. Now, when you are offering interest waiver, we are taking into consideration three factors. One is to give this facility to the customer. To give this facility to the customer, the capital amount, we have borrowed from our depositors. Okay, to give this loan, We have borrowed from our depositors. Now we have already paid the depositors their interest. Depositors are the interest given. So by if you are giving interest waiver, can we forego that? Can we forego that? ඒක අපි හිතන්න. Interest waiver එකක් දෙන්න ඉස්සෙල්ලා හිතන්න ඕන. Already we have spent for this. Are we going to forego that? ඒ cost එක අපි දරා ගන්න යනවාද? Secondly, we are going to lose our opportunity cost, future interest. Our source of income will be, source of funds will be reduced. So we have no option or way of invest that into the market and earn something. Opportunity cost. So it's over. We are not able to get any further income over that. Therefore, the important factor here is we have to consider very carefully these interest waivers. Only it is necessary only because the customer is unable to pay, his cash flow is not sufficient to pay. If you put this as a term condition, and he will be further, he may not be able to revive his business, then we may offer this interest waiver. So whenever giving interest waivers, we had at least we should try to recover our cost of funds. At least we should recover cost of funds. So therefore, it can be offered as a part interest waiver, not full interest waiver. A part interest waiver may be possible because the interest is not yet capitalized or taken. It is there in the suspense account. So we may be able to do it because we have authority. Interest waivers can be given by the manager within the leading authority, not necessarily in the board approval. But if the interest is, for example, overdraft or a loan, if the interest is added to the capital, then you cannot give an interest waiver because the capital item you have to get the board approval for that. If the interest is added to the capital, you can reverse that. It is now already part of the capital. Therefore, without board approval, you can't recover that. Whatever in the suspense account only, you can do the waivers. Okay, right. Then the other important factor here is whenever you give interest fully waiver or part waiver, that should be given as a terminal benefit. That means the loan given may interest waiver apply only, not at the beginning. It was high default. So condition interest waiver it should be given as a terminal benefit. Terminal benefit. Okay. Therefore, now this concession has to be reported to the CRIB. Interest waiver that has to be reported in the CRIB. Bigger report right? Interest waiver duna customer after so long, sometimes after about 5-10 years, now he has established a business and he has been grown in business. When he comes for a facility back, we can ask the customer to pay back the interest component or part of it. We demand karana pulva. Okay, so keeping that in mind. Then the restructuring, the other factor is the take part in the management. Take part in the management. Management again. Whenever you, specifically when you infusion the capital, whenever bank is putting further loans into that customer's business, you may appoint director one or two directors to the board of directors to take part in the management, to look after our interest. That's a part of restructuring. Okay. So these are the how to handle a restructuring program. Rescheduling refers to extending or lengthening of the loan tenure, resulting in revision of your monthly installment amount so that you pay a lesser such sum each month. Meanwhile, restructuring involves changing the type of structure of your accession loan to help you improve your current cash flow. Right? Rescheduling is short-term, uh, short-term money solution. Restructuring is a long-term solution. Okay. Why need to rescheduling or restructuring? According to Central Bank of Sri Lanka, various special assistance, finance, loan facilities, restructuring, and 6 months moratorium on businesses, small and medium enterprises, and individuals have been provided. Because with the COVID-19 epidemic situation, Central Bank have asked the institutions, financial institutions, banks, as well as other institutions, to various special assistance should be given to the customers. If certain structures have been given, loan facility has been 2%. Loan facilities has been developed by the government by Central Bank under refinance scheme. Then the credit guarantee schemes also incorporated with this COVID-19 pandemic situation. Right? The assistance provided would be able to maintain the business operation of SMEs, protect their jobs, and encourage domestic investment. The Central Bank has given support to the SMEs to continuously do their business, although the external factors have a big blow on their business. To revive the business and go ahead, the financial assistance has to be given through the banks. Central Bank has arranged for these facilities. From banks' perspective, the rescheduling or restructuring can help the banks to reduce non-performing facility portfolios, introduce immediate write-back of specific provision, and maximize credit recovery exercise as well. There are three benefits banks are getting by restructuring or rescheduling. Reduce non-performing facility portfolio. When we do when we do rescheduling, restructuring, our portfolio will be bring back to the normal situation. So the NPA will be reduced. And immediate write back of specific provision. So once you it comes to the normal section, whatever provision made into the P&L will be reversed back. So it will be coming back as a profit. And maximum credit recovery as well. So one-to-one ongoing basis, long term. So therefore, all the banks, specifically commercial banks and specialistic banks, carefully evaluate each and every customer which have been defaulted that can be restructured or rescheduled. It's a win-win situation for the bank. For us, customers, rescheduling and restructuring can help them to ease their cash flow, allow continuity in their business, and perhaps avoid any legal action. Okay, so recovery is very important for that. Well, moratorium is another term came with this pandemic situation in 2020. Okay, moratorium refers to a deferment of payment installment by customers to banks without any charges or penalty. So what is moratorium? Moratorium is the deferment of payment of installment. Right? Loan installment payment will be deferred for a period, 6 months or 1 year, depending on the moratorium period. That you can give that moratorium. Not necessary to be with the central bank's guidelines. Central bank guidelines is given moratorium should be given for these categories for 6 months, or then it will be extended by 6 months. The bank itself can offer this moratorium. If you find any customer having a difficult situation to repay the loan installment and he need time to pay, you can go moratorium for that customer. Right? Now, important thing you have to understand is when you postponement of the moratorium, the practice is the entire amount has to be paid at the end of moratorium period. Okay? End of the period, moratorium period, the entire amount has to be paid back. The problem here is with the customer having sufficient cash flow at that time to pay the moratorium. Right? Therefore, Central Bank has offered to give a loan for a further period to pay the moratorium in installments. Again, when you give a further loan on moratorium, repayment ability will be affected. That means the customer should have a sufficient cash flow to pay the existing loan as well as the moratorium loan. Okay. Now these things has to be considered when you offer the moratorium and try to recover. I had a case, one of the customers showed me complaint that he was having a overdraft facility and he requested for a moratorium. After 6 months interest has been debited to the current overdraft. So what happened? The current account limit has been exceeded by debiting the moratorium. What is the repercussion of that? Collateral is not sufficient because when the limit has been exceeded, the collateral coverage is not there. So moratorium loan is unsecured thereafter. Okay. Without considering, without thinking, done this. When I asked from the bank, because the customer came to me for a consultation, so I asked from the bank, අපි දන්නේ නැහැ සර් මේක සිස්ටම් එකෙන් ඩෙබිට් කරලා තියෙන්නේ. කාටද කියන්නේ? සිස්ටම් එකෙන් ඩෙබිට් කරලා. කස්ටමර්ට ගවන්න පුළුවන් බෑ කියලා සිස්ටම් එකට කියලා දෙන්නේ. ඩිසයිඩ් කරන්න පුළුවන්ද? It is just who you are there to give the advice, instruction, give the background about this. Even after giving the loan, customer signed trouble. Therefore, the moratorium has been misunderstood by most of the bankers. So, but my personal view is, if the customer having a difficulty in repayment, cash flow is not there, then go the moratorium as a terminal benefit. That is, after paying all the loans, return recover the moratorium. During that period, you may charge the minimum amount of interest. You may charge 2% or 2.5% interest. You may charge that may be able to customer may be able to pay. After some time, before the loan is paid in full, in between the customer's cash flow is increased. Well, then you can take forward the moratorium loan and try to recover. Always, any recovery should be matched with the cash flow of the customer. That will be the fundamentals in the lending. Moratorium is part of the initiative that has been introduced by the banking institution to offer relief to the COVID-19 effect. But it does not become a relief. It has become a burden now. Most of the customers, this moratorium has become a burden because we have incorrectly applied that. Okay, right. Let us look at the latest development in restructured rescheduled credit facilities. What are those? How it has been defined? The Bank Act number 13 of 2021, which is implemented from 1st January 2022. This act, the banking directions have been in force since January 2022. Okay, so practically now, what in the earlier procedures, earlier circulars have been cancelled about the how to treat the restructured and rescheduled facilities according to central bank guidelines under employment regulations. Let's see what are these. Restructured credit facility, I have given the relevant chapter also, chapter 10.11. Restructured credit facilities are where the original repayment terms have been amended due to deterioration in credit quality, while the respective credit facilities remain as performing facilities as defined in the direction number 511 above. So the 511 above we have discussed on the first day. Okay? 511 what can it? Yeah. Stage 1 facilities. Stage 1 facility. And now what is this? Now we are talking about the defaulted facilities. Now this, according to this central bank directive, facilities remain as performing facilities. Okay. We are terms and amended to due to credit quality deterioration, right? Not yet answered NPA, but quality has been deteriorated. Therefore, although it's in the performance section, it's considered as can be considered for restructuring. Okay, credit facilities restructured up to 2 times, other than upgraded credit facilities as defined under direction 11 below, shall be considered as stage 2 credit facilities under SLRFR 9. This is a guideline that been, if the restructured for 2 times and other than upgraded credit facilities defined direction 11 should be kept as a stage 2 category. Credit facility restructured more than 2 times other than upgraded and under direction 2 above shall be considered stage 3. We put down 10.3 something. We went on other than okay, restructured up to 2 times, right? Credit facilities restructured up to 2 times. Other than upgraded credit facilities, under should be stage 2. Credit facility restructured more than 2 times, right? Restructured more than 2 times will be classified under stage 3. Okay, highlight right. Rescheduled credit facilities are where the original repayment terms have been amended. Rescheduled credit facilities are amended while the respective credit facilities remain as non-performing credit facilities as defined direction number 11 below shall be considered as stage 3 credit facilities under SLR FS 9. Okay. Licensed bank shall consider the factors listed direction number 7.1 above in assessing any deterioration in credit quality. However, such assessment shall not be limited to factors specified in the direction 7.1 and shall ensure adequate provisions are made in respect of restructured and rescheduled credit facilities commensurate with the significant increase in the credit risk. Okay, although credit facilities are restructured and rescheduled, directions are given, ensure adequate provisions are made. Okay, ensure adequate provisions are made in respect of commensurate significant increase in the credit risk. We are taking into consideration the credit risk and have to make provision sufficiently. How much of provision given? That has to be decided by the bank. Okay, licensed bank shall not grant new credit facilities or repayment of non-performing credit facilities to same borrower unless the new credit facility is also classified as non-performing credit facility. Right? New loans should not be given to repayment of non-performing loan. Default loan given, loan then bad. Okay. Then comes to upgrading of credit facilities. Licensed bank may upgrade the credit facility from higher stage, stage 3 or 2, to a lower stage, stage 2 or 1, subject to following. Now, after come to settlement, we should do how to upgrade the credit, what you call the stages. Right? Upgrading of credit facility shall be in accordance with the policy approved by the board of directors, and rationale for such upgrading shall be properly documented. Such policy at a minimum shall ensure the following. So board of directors has to prepare a document, properly documented, should be documented the rationale for upgrading. Therefore, the rationale for upgrading is bank to bank may vary, depending on the board of directors' decision. Okay. Settlement of the due payment, A. Settlement of the due payment, Karoti. Credit facilities other than restructured credit facilities in stage 3 and regional credit facilities shall be upgraded if due payments are fully settled by the customer and bank is satisfied that the customer is able to service this service obligations up to the foreseeable future. We come back. Settlement කරාට පස්සේ ඉදිරියේදී ආයි ඩිෆෝල්ට් වෙයි කියලා foresee කරන්න පුළුවන් facilities විතරයි you can stage 3 වලින්ද පල්ලෙහාට ගන්න පුළුවන්. Okay. Then restructure credit facilities, upgrading from 3 to and regional credit facilities. Licensed banks exercise prudence in upgrading in non-performing credit facilities, underperforming credit facilities, and upgraded credit facility has exhibited sustained trend status of improvement to justify the improved classification status. Stage 3 වලින් 2 වලින් 1 වලට transfer කරන්න පුළුවන්. Right? Licensed banks have prudent in upgrading non-performing credit facilities, underperforming credit facilities, etc. Right? Upgraded credit facilities has exhibited sustained trend status of improvement to justify the improved classification status. Has to be justified. Upgrading of rescheduled and restructured credit facilities shall only be carried out by the risk management department and shall be independent from the credit facility review mechanism. So this type of upgrading from stage 3 to 2, stage 2 to 1 can be done only by the risk management department of the bank. Like should go through case by case and do this upgrading. Okay, that's all about our rehabilitation work and the current changes I had introduced you in the central bank guidelines, central bank approach, how it has been changed. Okay, right. So let's have a small break. Then for 10:35 we'll come back and continue with the second session. Shall we start?
Okay, sir.
Okay. Right. Now, next option, the best option is under rehabilitation is going for business turnarounds. Business turnaround. What is the concept of business turnaround? How to business turnaround have been done by the banks and even financial institutions can do that. What are the concept of business turnaround? How to do it? Okay. Business owners work hard, right, to deserve the success. Most of business owners have to work hard to deserve their success, to get success. But due to certain reasons, sometimes you may find that their businesses have been getting collapsed. There are certain instances where it can be turnaround, workaround, to identify the properly. Do you have a plan for success? Failure of most businesses happen as they erode over time until the core crumbles and the mission is unrecognizable. It's Gerald, what he says. In every business, they are having a plan of success. But most of the business fail because over a period of time, they forgot about their main objective. They may divert their attention for some else. And ultimately, the core business getting distracted. So this we can see due to number of reasons happening. Let's see what are these things. The primary business objectives are increase the sales, increase the profits. To increase the profit, to increase the sales, increase number of customers. This is the objective. So we bankers, when we do for the customer default customers profile we are managing, we have to see to what extent they are be projecting future to increase the customer base, to increase the profit. Increase the profit, sales has to be increased. This has a chain impact. What is a defaulter facility? Nursing sick units. It's a problem with the business of the customer. That's a problem. Some consider that it is better to continue and fail business and recover. Sometimes some banks may be to be continue with the customer, although they have failed, and try to recover maximum available rates. Some want to fail business killed. Some banks try to get they are not worried about the business, but they are worried about the recovery of their loans. Therefore, they are killing the business. That means taking entire assets of the business, take over assets of the business, and liquidate the assets. Ultimately, business will be failed and closed down. Even close down the business is called business kill. But not all are willing to pay for the attempt to recover the business. Not all are willing to pay for the attempt to recover the business. This is the problem we are having. All the bankers, not only bankers, even stakeholders, they are willing to pay for the recover the business, to put the business, put the customer back to business. And we discussed it a little while ago about the restructuring and rescheduling, restructuring specifically. Yeah, then the customer's capital is not sufficient, or customer needs some extra cash to run the business or turn around the business, that banks are not coming forward to give funds. I told you why the banks are not coming forward. Under bank's policy and bank's policy, if a customer is defaulted, that customer cannot be entertained for any further facility. And the bank, it is the discretion of the top high management. So whatever activity done by the lower level branch managers may not be fruitful. Due to the reason that there's no always the banker look at the customer default as a willful default without doing any analysis, any background. They take customer defaulted willfully. Do businesses continue forever without any fail? What is the position of the businesses continuity? How many businesses that exist today are more than 200 years, 100 years, 50, 25 years old? You look at our customer base and the businesses in Sri Lanka. How many businesses are going more than 200 years? None. Not a single one. Even the certain British companies established in Sri Lanka, some of them are still there, but still they are less than 200. There are some businesses, Sri Lanka, our own businesses, running more than 100 years. Very few. I think you can say fingers in one hand. Most of the businesses for 25 to 50 years, maybe 25 years or 50 years. Some of the businesses are running. What's the reason behind? What's the reason behind? This we have to understand. This we have to understand as bankers. Right? So, more than 100 years, Sri Lanka, you can see that Perra & Sons. Perra & Sons manufactured bed 128 years. Don Carolis, 150 years. Nirpala, 100 years. There are very few businesses running 100 years. Including Melbourne is 60. The Samsung for 70 years. Samsung ESI 70. Harish Chandra 65. Likewise, if you look at our businesses, are ranging 50 to 70. There are certain businesses still continuing. So most of the business are nature. There's no successor plan. Most of the businesses have been failing due to there's no successor plan. Right? Most of the businesses are family businesses. They are not continuing more than 25 years. First generation start the business, continue, and the children take over. From there onward, business is over. Look at E.A. Singer. He started the business. After his death, Soma Singer took over, and he have done a lot of expansion. Sarnavaini, RNFM, all these things. He expanded with the Swarnamahal. E.A. Singer did only pouring business, where she took over and went off. After her death, what happened? We have a number of examples here. Their children could not continue their business. There are a number of businesses like that. Next generation, the second generation maybe, with the third generation completely out. There are reasons for that also. Look at most of the business people today try to educate their children in the Western countries. They will never come back, continue the business. So with that person, business is over. These are the existing problems we have seen to continuity of a business. It's very limited due to these factors. So we have to understand why we are lenders for these businesses. So if the next generation will not come forward to take over, and next generation are capable of doing the same thing. Sometimes for example, if you see Perra & Sons, it's the fourth generation, they are doing very well. Fourth generation. They are doing very well. What is the oldest business in the world? This was in the social media some time back. What is the oldest business in the world? She's having 2,442 years or something. 2,442 years of existence. Now, the 42nd generation is continuity doing that business. That is bamboo restaurant in Japan. So good. Bamboo restaurant in Japan. Now is the 42nd generation Japanese culture that still doing that business continues. So we had to learn from those secret behind doing continuously. The commitment of the generations to the business is the success plan. Well, if I look at this businesses problem, they have a life cycle. You call it an industry or a product or a human being. You have a life cycle. It's rise and fall, the customer's interest. Industrial life cycle. When the production is started, right, it's a toddler, and is growing maturity, right, come to the maturity, and then started declining. From here, it's going down. Even a human being, same, no? So from here onward, how to continue? So any product for that matter, in industry, is a concept is as a life cycle. Even for us, we have a life cycle. Some businesses are failed at this level. Some businesses are failed at this level. Some are going up to this level, 35, 40 years. And then about 60s, thereafter, they really go for 90s and 100s. Businesses are failed in this. Now, if it comes to this level, what you call mature level, teenage level, and come to this level, if you understand the biological changes is taking place in our body, we try to do certain activities to keep our life longer period. Otherwise, before come to this stage, most of them are going down, collapsing. These biological changes. It's natural. Right? We know that in our body, inside, all this, but how our blood circulatory system, what are the problems coming with after 35, 40, why the reason that we have to understand. Then we can change our lifestyle and continue life. That's the same things happening in the business also. So business have a production life cycle. The introduction period, it is growing up. There won't be much of a profit, only survival. In the growing age, what you call deeply growing upward, then come to maturity level, right? Then comes matured, third level, and after that starting declining level. After declining. This is the period, over a period of time, is the volume of sales will take business and the profits. Okay, this life cycle we have to understand very carefully. Most of the customers comes to us at this stage when it comes to mature level. Of course, when the business is growing, well, we can grant facilities without any difficulty. Why? The payment is there because the profit is generating a lot of profits. When it comes to maturity, gradually, product gets matured, profit is getting declined. It's come to the peak level, then gradually customer interest reducing and business will collapse. So that depends on how long it will take. This this maturity may come sometime this level. Sometime here itself the maturity comes and decline here itself without going for long. That's depend on the business. What the business has to understand is when it comes to maturity level, it has to be do the turnaround. It has to be understand what it has needed to turn around. It's called normally in the business cycle re-engineering process. Re-engineering process. That means try to divert, right? To divert the product to meet the customer needs, and it will be extension will be increased. If the customer has idea of understanding the position and try to change, and it will again go up, it will increase. And over a period of time, it comes to that mature level again, declining, and again the engineering process has to be continued. That's how Ferrer and Sons and all other businesses have been continuously doing business. Otherwise, within 25 to 30 years, they will collapse. They change their product, their business according to the customer need. And being with the customer, that's the basic principle behind this. Now the re-engineering process is starting when this declining started. To understand, this started. You may find that most of the tourist hotels, even jewelry shops in Sri Lanka, have you noted that every 5 years they are changing their front layout and coloring layout, display patterns? They change. That's re-engineering. They come to the peak level to get the attraction of the customer. The old ones has removed, new set of things applied. Even tourist hotels, mostly. Every 5 years, they refurbish. This is re-engineering. So they can survive and continue for a longer period without any disruption. So this is what we have to understand. As bankers, how do we understand where the customer's life cycle is? Where the customer's life cycle is. There may be, you can use certain techniques to understand this up to a certain level. The basic information cycle is the financial statements of the customer. For 5 years period, at least, you analyze the trend of the customer's business, sales, gross profit, net profit, and other, specifically these three, operational side ratios. See, what is the ratio? If the ratio, some you may find this area very, in the introduction period, ratios are increasing very slowly. But in the growing period, if the ratios are increasing very fastly, rapidly, that means that business in growing age. So when the business is growing age, lending is very easy for us because repayment is, the sales are there, repayment is there. When it comes to this level maturity, the increase is gradually getting slowed down. So if you see the ratios are gradually not increasing as far as earlier, they understand that the business is going to mature. And when it comes to peak time maturity, the ratios are stagnating. Profitability ratios, activity ratios stagnating, not moving. Then thereafter starting declining over a period compared to previous year, gradually decreasing. That's the time you may find this. So if the customer asking facilities at this level, well, Panala without any fear. If you come to this level, we have to think twice. Not for long term, short term or medium term, we may entertain because depending on the period, how long this maturity has been taken place. Right? If the customers' ratios are declining, and if most of the customers are coming to us at this level, declining level, asking for facilities as a danger. What's that? Yeah, our loans are going to be in threat because customers not generating sufficient income during this period. Unless otherwise, customer is doing a turnaround policy. So when the customers are coming defaulted and coming to this level, we have to interview carefully and see what are the strategic changes they are offering to avoid. Strategic. Restructuring, strategic restructuring policies. If that is satisfied, go ahead with that. So the product life cycle, industry cycle, is one of the very important principle we have to understand when we lending. Business turnaround is a informal management-led reversal process to prevent a financially struggling or poorly performing business from insolvency and liquidation by returning it back to profitability. A restructuring debt using an out-of-court debt negotiation process that's outside the legal framework. Without going to courts, without file action, try to reverse the process. Business turnarounds are management-led reversal process. Prevent financially struggling or poorly performing business without falling into insolvency or liquidation and bring back to profitability. It's called business turnaround. Right? Now, this principle is very can apply where market is stable. If you have a good stable market, customers come forward for changes and the collateral resource available, business turnaround is a best option. Okay, if the basic is there should be a market, proper market to do the turnaround. Otherwise, business, even spending so much of money to do turnaround, but the sales are not there in the market, this will not be successful. What are businesses turnaround in Sri Lanka? If a number of success businesses are there in Sri Lanka, is done this business turnaround principle. Take this called as sugar corporation. Sometimes it's the Galloya Valley, the sugar corporation started, and this what you call sugarcane cultivation, and they are producing sugar. With 1979, Yajavardhana government's policy of open economy, the industry was collapsed. Who are the people affected? Large number of people affected. Sugarcane cultivators, then the factory was closed down, machinery was corroded, and we had to import everything from sugar from abroad. In 1990s, after 1990s, this has been turned around again, given to the private sector. Collaboration of government, state and private sector collaboration, it has been done a turnaround. So led by, I think, LOLC and another company also taken over the management of the business, the sugar corporation, whereas the government having 49%, government gives all the machineries and the building infrastructure. Working capital is financed by these two companies, and now they are producing 10% of the requirement of sugar in Sri Lanka. Not only that, there are a number of other byproducts there in the sugar industry. Have you come across this? Hmm? The main, the main source, the what do you call it, benefit is you got the sugar cane cultivators, the farmers, right? They got income. The people in the area that get income. And when it comes to manufacturing sugar cane, like this one example, what are the byproducts of this industry? Right? Sugar is the main product. Then from the remaining husk, they manufacture ethanol. So that's why that originally when the ethanol was manufactured at Galloy Valley, so Gallarahu Gani, ethanol was start manufactured in Sri Lanka and for using for liquor. And this ethanol is used for perfumes, manufacture perfumes in Sri Lanka. So if we increase the production, the need for ethanol in Sri Lanka can be managed. In Brazil, the largest sugar in manufacturing country, they are using this ethanol as fuel for the vehicles. Petrol, ethanol. Okay. Then when this crushed and water, the excess water is taken off per day, 100,000 liters of water will be pumped to the given to the National Water Supply Drainage Board by the sugar corporation, sugar company. It will be used as drinking water for the people in the area. Then the husk is used for animal feed as well as a fertilizer. Then the byproduct is that what you call sugar is called byproduct like jaggery. It is used for mostly local liquor. Kasipu Balategal. That will be used for using this as a sweetener. Right? So if you can see that business turnaround, if you are done properly, how much of benefit to a country can get. Now this latest one is, I think this one, our latest minister, SB, he going to turn around the paper corporation. The paper corporation, twice or thrice, they try to do this turnaround. But unfortunately, due to the market, lack of market is not strong, so the the private sector investment income as requested, as expected. So we can manufacture our own paper by using pulp and this agricultural waste. A lot of things are there. Likewise, the business turnaround will help a lot of business the countries need. I think after the war was over, in Jaffna, that is called KK cement plant, the government wanted to do the turnaround, the KK cement plant, because the clinker, even for manufacture cement in Puttalam, clinker is coming from KK's and Aruakkalu raw material. So during the trouble time, 1983, so after that, this is the Jaffna, when the Jaffna, almost all electricity lines were destroyed by the LTT. So electricity supply was given to the Jaffna town on the generator situated at the KK cement plant. See the capacity. But I think due to the obsolete of the machinery and all, new investors did come forward I think we very close. If a foreign investors come forward with a new machinery, it can be started because this infrastructure is there, raw material is there. We can sell sufficient cement. So this is what business turnaround does to the country. So especially the large businesses. Even for a small businesses, if you look at the problems, try to turn around and that will be benefit to the entire country. Business turnaround involves reviving a struggling or probably dying business due to factors beyond the control of the management. Business turnaround involves reviving a struggling or probably dying business, where businesses are dying due to without doing any, can't take out fee. Now look at see Tulheria textile mill. Tulheria textile was one of the largest textile industry established in 1970s. Mrs. Bandanaga's period. It was turned around by even the mass holdings now taken over. It has a huge complex. I have been there. It has a training center, swimming pool, quarters, big complex. It is going to waste. Now mass holdings have taken over and now using as a training center. Textile industry training center. Successfully continuing this business turnaround. Right. So we have examples in Sri Lanka. They have successfully done this turnaround. This implies taking steps that would turn companies' distressed financial position into a healthy and profitable one. Distressed financial position into a healthy and profitable one. It is widely believed that business turnaround is a short-term action designed to ease short-term financial difficulty. Turnaround is to basically looking in the world, internationally, worldwide, in the business community for a short-time financial difficulty. Turnaround principles are applied. The company that struggles to meet up with its short and long obligation is obviously dying and need turnaround. Because most of the companies needed restructuring of their debts. Huge load of debts has been one of the issues when successful businesses getting defaulted. Okay, so the borrowings, specifically bank borrowings, bank has given a lot of funds to Tulheria, to Kuda, and all these textile industries. Because the default, the companies that failed, banks were facing difficulties in recovery, they could not recover at all. Therefore, this huge amount of liabilities is one of the obstacles to going for a turnaround. Tulheria case, the government has took over all the liabilities, loan payment, loan payable, receive payables, all everything. Government took over, cleaned the balance sheet, and given to the first. It was given to these one of the Pakistani companies, right? And that again they could not continue. Mass holdings took over. Anyway, so it is where their business is going in the dying path. Such turnaround will help to come back to the profitable picture. In a company that has experienced a period of poor performance, moves into period of financial recovery, is called turnaround. Poor performance can be converted or diverted looking at the why it's in poor performance. Identify the actual problem of that business. Why it is dying? Why is the reason? It has to be changed. And you can do the turnaround. Can we do the turnaround? A turnaround may also refer to a recovery of a nation's or region's economy after a period of recession or stagnation. Even not only for the business, even for a country, this turnaround principle can be applied after recession period. Now, for example, Now we are facing this COVID-19 pandemic situation, that casualty has been decreasing. Now it's a prudent government, an efficient government is there, be able to turn around the region, our country's economy into a taking off situation. How the Japan came out from Hiroshima and Nagasaki attack, completely destroyed. After that, from the ashes, Japan has been rising using this technique, business turnaround, recapture the entire. They grow beyond what they were earlier, before the World War. Okay, similarly, it can refer to the recovery of an individual whose personal financial situation improves after some time. Okay, so business turnaround are not for businesses, individuals, and for our countries. The principle can be applied. A business turnaround is a reversal of falling or failing results, sales and profits throughout fundamental change. Fundamental change. Typical turnaround activities include selling of unwanted assets. The assets are there. It is unproductive, or it is not needed immediately, can be disposed. Closing some product lines and building others. Right? For example, the certain products are competitive products that may be removed, or we stop making products, producing that. So for example, if you see Unilevers, they were manufacturing number of if it is soaps or the laundry detergents. They certain over a period, some period time, they stop producing those items. Right? Like sometimes they now used to manufacture sunlight, and they were manufacturing earlier rinse soap, and certain soap varieties, Rexona. Those are no more in production. They are removed that. Closing some product line and building others, take over new ones. Okay, so by that, they do the turnarounds. If they identify that the principle is that we come to the peak level, maturity level, the product is come to the maturity level. From there onward, there's no reengineering will not help. Kill that product. Use as resources for other manufacturing process. That's what the benefits of the turnaround. Adjusting the workforce according to need, retention the work, recruiting the skilled laborers are some of the activities in this business turnaround. Competitive repositioning. Reposition the business to be repositioned to meet the challenges of the competition. The competitiveness can be improved. New pricing policies. Okay. New pricing policies backed by the market. Operations improvement and refinancing. Refinancing is pumping funds with the cost of the finance will be reduced. Right. These are some of the fundamental changes expected. So you can see the declining. Before it goes to declining, turnaround will take place in between. But it comes to this level, that turnaround is going about. If we continue to be there, company will disasters close down. Business turnaround is a process needed to bring about those changes necessary to solve a business operational, strategic, and financial problems that will restore the struggling business to its former financial health and viability. Put the business back to the glory of the past. That's business turnaround. Before these new changes. Right? So, somewhat if you look at some businesses, they divert the business into different areas and try to be in the business turnarounds. Sometimes, for example, take the case of Cargills. Cargills and Millers were in 1960s, well, big departmental stores. They were in 1960s, very large departmental stores. After 17, latter part, they lost their businesses. They lost their certain products in the market were no more in production. So what they did, yeah, they did a turnaround by going for supermarket. The Staples Road at Slave Island, they done earlier corner where I was started at the corner supermarket. Following that, immediately had started their supermarket chain. Turnaround for a successfully. So still Cargill is there without collapsing. Okay, this business turnaround useful. There is examples if you look at, you can see it's not that difficult to only thing to understand the problem, diversify the business towards the viable operational, strategic and financial problem will be solved. Struggling business can be bring back to health and ability. The process is normally driven by the business owners with the focus on improving management, profitability, cash flow, productivity, and revenue. Factors. Important, improving management. That's the most key, improving the management. The decision making and success factors. Identify the key success factors and try to use that key success factor, develop the key success factor and convert into business, and it will be profitable. Okay, the business turnaround process is normally used in the early stages of business decline, poor performance and financial distress. Turnaround has to be started before it is completely collapsed, before it goes to what we call NPA. The business before converting transferring NPA, during that period of because stage 1 level, right, before it transfers NPA, the turnaround has to be done. Funds are generated internally to ensure the business has sufficient cash to see it through the next few months while business turnaround plan is implemented. When the business turnaround principle applied, it will be internal funds generating will be increased, so that will be sufficient for their day-to-day operations. So this job of turnaround, when the declining business will push upward for turnaround. The 7 steps to business turnaround. If you follow the 7 proven turnaround strategy steps, you don't have to worry about your financial future. When you apply these step-by-step proven process, that will turn around your business, so you can survive temporary short-term crisis, regain your profitability, confidence, and save your business. This process works in any business, but was specially designed to work in smaller businesses and are not based on some theory or turnaround methods used by the big companies. For small, most of the SMEs we find facing this type of problems. SME sector, default rate is high because These turnaround principles will not, have not been applied by the banks. What are these 7 steps? Discover your position and what caused the problems you are dealing with. Identify the causes of the problem. Problems and the causes. Problem and reason for that problem. The cause. And the cause and effects of the problem. Making sure that everybody fully understands, commit and support the situation. Commitment and support is very much needed for everybody. All the stakeholders this is needed. Prepare a realistic turnaround plan your creditors will support. Right? Prepare a realistic turnaround plan. The creditors will also support creditors. They need their funds back. So they wanted the business to be run, collect their funds. So they have their support is there. Stabilizing the business finance and maintain positive cash balance while creating a high profitable core. Stabilize the financial where the cash flow balance is positive. Increase profitability, focus on the profit and cash flow, not the revenue. Right? Profit and the cash flow, not the revenue. Revenue income is misleading. That's why. Increase sales without spending more on advertising. Right? So increase sales without going for spending on advertising. You can zoom out on different types of advertising methodology can be adapted without using spending money on that. Implement your business turnaround strategy step with precision and consistent without changing. The same turnaround strategy steps can be used to take a very successful business to the next level or help an underperforming business to reach its full potential. These are the 7 steps of business turnaround. Difference between turnaround and the restructuring. Turnaround is also part of a restructuring to look at, but there's a difference. Turnarounds mark a period of improvement while bringing stability to the business future. Right? Turnarounds improvement while bringing the stability to the business's future. Business turnarounds are pre-insolvency and informal actions taken by the business. Restructure, however, a range of formal insolvency process aimed at helping business in severe financial distresses. That's the difference between restructuring and turnaround. Turnaround business strategy is strategic, measurable, linear, and not driven by task and to-do list. Results and focus the cash flow. Strategy should be strategic, measurable, linear, not driven by task and to-do list. Result and focused on cash flow. The focus see opportunities, isolate problems. Efforts will be see the opportunities, isolate the problem, we can do business turnaround. What is the plan to do the business turnaround? First, analyze the problem. Financial reports, inspection, go and see customers' inquiries and industry standards. Analyze first where is the business is. Then prioritize greatest impact. The 80-20 rule. We discussed this in the last session. What is the 80-20 rule? Right? 80% outcome problems are based on 20% of actual problems. To solve this 20% of actual problems, 80% automatically solved. 80-20 rule. The quick wins. Time equals to dollars. Time is money. That's what the business always says. Plans are great, but implementation is the key. There are great plans are prepared, lots of people, plans are there, but how to implement? What are the steps involved in implementation? Simple tactics, effective tactics, critical tactics, stop tactics, unique tactics. right? Implementing strategical, implementing key, simple, effective, critical, stop tactics and unique tactics are can be continued. What makes a plan successful? The top level is the communication. Top level is the communication. It's very, very important, communication. Second is confidence. That confidence about successful. It's consistent without changing the same bit, then the clarity of the topics and the clarity of the units in the celebration. Finally. Right. Let us see what are the real issues in especially Sri Lankan backdrop. Issue one, the stakeholders fail to identify the potential reasons for failure. They fail to differentiate between acceptable but uncontrollable factors and unacceptable but controllable factors. We have to, when you going for a business turnaround, the first issue is there are factors controllable, non-controllable factors, but they can accept. But unacceptable but controllable factors. Identify these factors. That's issue one. Second issue is businesses that can be recovered with potential benefits to the state. All stakeholders are allowed to kill. When you try to recover by selling assets of the business, right? So you kill the benefits to all stakeholders. You take your position, but you are not leaving anything for the stakeholders. Potential business to stakeholders are allowed to all to fail. Right? The process of liquidation of itself will destroy and or take a big share of value. This reduces the value available to the key stakeholders. Now, for example, if your property is mortgage, so bank try to sell and recover. For example, if the bank is trying to sell to cover the bank's receivables, loan and installment only, without looking for the market value of the asset. Property will be sold at a lower price, yeah. Very big gap between the market price and the lower price. That's why central bank is now insisting when you do parrot, right, or the mortgage hypothetical action, the market really has to take into consideration in fixing the upset price. So it will help the other shareholders or the stakeholders to get some sort of share from the liquidation of the assets. The stakeholders do not agree, hence the recovery is difficult. This is the problem. Stakeholders do not agree for the proposals made by the bank, recovery is more difficult. Then should the business be protected? Yes or no? If so, who would bear the cost of protecting the business? The stakeholders? Why should the stakeholder protect the business? Well, it sounds simple to answer. Do a cost-benefit analysis. Do a cost-benefit analysis. What is cost-benefit analysis? Whatever amount you spend, it should have a benefit more than the cost. If the benefits of protecting business exceed the cost, then protect it. Benefits greater than the cost, then protect it. Now this concept of CBA, cost benefit analysis, even practically you also used to do that, no? Don't you think so? Everybody, you are doing this CBA analysis. When you try to buy something, for example, you normally girls, go to Adele, try to buy some dresses. So you take the dress and see what's the price. So much, right? and asking how many pieces of this? What 10 pieces? You became moment but market cost benefit taken. So you won't buy it. You buy a 10 rupee spending to buy a ballpoint pen. Why are you scribbling that? To see it writing properly? Scribbling that. No? So try to identify the cost and the benefit. Whether it is worthwhile for this 10 rupees. Without your knowledge, you apply this concept of cost benefit analysis. Each and every person we do does this. It's a common factor. So always we see village is benefited. So spending so much, there is benefit before you spend some money. Similarly, business or turnaround, what a rehabilitated business, what is the cost? How much of cost needed? Whether it can generate an income of 3 times. So I just use some managers to some practical issues. Managers always grumble about short of staff. No. They are always trying to grumble about short of staff. When you are given staff, what will happen? Additional staff. The staff member has to pay salaries, bonus, overtime, other fringe benefits, everything going through your P&L, profit and loss account. So you work out total cost of that employee and what is the return from him. How much of business can be improved by him? It should be at least 3 times of what you spend on that employee. Otherwise, recruiting that employee will cost to the bank. It's not productive. But I feel personally, if you have work to do, give you overtime and get the things done. It will much better, much greater than recruiting a new person. Cover up the cost. So the cost benefit analysis can be applied in everywhere. Okay. Now, who are the stakeholders of the business? The business have number of stakeholders. We start from the owners. Owners are equity. They are worried about the business. So they need profits. Therefore, they are worried about the continuation of the business. Then the customers, consumers. When the business is closed, consumers affected by the product is not available anymore. The product is not available anymore if the business is closed. Employees and also employees, family members, if the business is closed, they are affected. The employees and their families, they'll lose their job, they'll lose their income, so they need the business to be continued. They want business to be continued. Then the creditors. When the business is closed, creditors' business also getting affected. Business should be there, creditors to keep on supplying goods, the relevant merchandise or inventory. For that, business should be existence. The government might need their taxes, to collect taxes. Therefore, government also needed business to be continued without fail. And also government wanted business to be continued because it's affecting the GDP, gross national production of the stability of the country, economy. That's affected. But our economy also, businesses are affecting directly. Because business is closed, the business activities are getting strengthened, therefore economy is affected by that. Then the suppliers. Okay, the suppliers, they manufacture goods, where business is concerned is there. So their supplier, so their raw material, their employees, all are affected if a business is closed. Finally, financial institutions. If a business is closed, our business also getting affected. We lose a client, we lose a customer, we lose a business unit that's affecting us. So when you talk about the stakeholders for organization, there's a large number of people are there involved in that business. It's called stakeholders. Okay. Right. Turnaround is done well. What would be the favorable impact on the economy? Better business environment. When the turnarounds are done well, without halfly done, better business environment. In business environment, it improve. Lower cost of credit. Why? Why? When the customer defaulted and not pay the facility, that will be added to the cost of finance. When the cost of finance increase, interest rates are going up. So that can be reduced by turnaround. Better utilization of economic resources, scarce resources. Economic resources are very scarce and be utilized for better utilization. Entrepreneurs will spend time on business, not avoiding the bankers and lenders. Spend time on the business without going bank to bank, without wasting their time in the banks. Better usage of foreign exchange. Ultimately, we need foreign exchange. However, business turnarounds encounter several special problems in Sri Lanka. To do this, actually, some time back, a company was formed by veteran bankers like Mrs. Tanakara, Mr. Gunaratna, there are a number of Ranjit Kabral. They formed a company to do business turnarounds in Sri Lanka. That was 15, 20 years back. But I don't know, to what extent they could turn around the businesses. What are the issues or the problems facing in Sri Lanka? First problem is attitude of the banks. Attitudes of the banks. Banks in Sri Lanka generally think that restructuring is merely adding the accrued penal interest and dividing it by 60. Sometimes, when they are good mood, they even stretch the repayment period of balance known by a couple of years, 5 to 7 years. Okay, so what do you mean by restructuring? Attitude of the bank, add the interest to the capital and try to amortize that. What takes is successful. Okay. Then debtors' attitudes are default generally fear the bank and being under pressure, often agree to arrangements that they cannot meet and the problem continues. නැද්ද කියන්නේ? කස්ටමර්ට ලෝන් එක දීලා අපි කරන්නේ මොකද්ද? මෙන්න මේක installment, this is installment, you have to pay on number for such and such a date. This much you have to pay monthly. Whether a customer generates income or not, he had to pay on that due date. Right? Arrangement that cannot be met, but he say, okay, problem continues. So it is very important. So debtors, they are fear about the bank. Whatever the bank tells, they say yes. With Rasangarana, they have signs, that's all. What extent that document can be implemented, nobody knows. Third one, faulty managerial focus. The business sector does not understand that turnaround requires a different managerial focus. They forgot to concentrate on cash flow and plan cutting. Financial sources to keep the necessary resources available and to continue to think only of customers, products, and production. Managerial focus on not only cash flow. They forgot to pay attention on the cash flow. The cash flow is the most important decision-making tool available for any business. We did this. Can you remember? Cash flow projection. We took 7 decisions using the cash flow. So it's a very important document. Without preparing a cash flow, you can find out customers' future requirement. Okay. Those specialized turnaround attempt. Unlike in developed turnaround regimes, travel companies in Sri Lanka never have 2 teams at the top. One to run the business and one to negotiate the turnaround. There should be top in the top level, commitment should be there for business turnaround. A specialized turnaround team should be there with the board management to do this negotiating turnaround with the banks. When they find them, their customers are stagnating and about to transfer NPA, they can immediately take action. The specialized team in the top management take over them and negotiate for a turnaround. So therefore, another team to run the business, day-to-day operations, looking at that. There should be 2 teams on the top. No protection for new debt is very, very important thing. Banks, sometimes quite rightly, reluctant and wary about funding ailing businesses because there is no protection for the subsequent debt capital over the previous debts. So we discuss Kalakali. One issue is banks' policy and system culture. If a customer is defaulted, he should not be entertained by branch managers. So therefore, the relationship between the bank, branch manager, or the loans officer, or the recovery officer of the bank, and the customer getting delayed. Lengthy. Relationship getting moved. Secondly, whenever you got a first facility, the new debt that is under threat. So therefore, businesses, the banks are now reluctant to grant additional facilities. Okay. The new management risk, if a new management is taken over the business, he had to pay all the liabilities, all past sins of the ailing company, including any unpaid certificate dues. His managers are reluctant to take the risk. Very common, no? Even ourselves the same. You manager go and you are asked to take over a branch. Okay. When you take over a branch, whatever in the balance sheet you are taking over, all the asset products as well as the liability products, you are taking over. So thereafter, recovery of default facilities, it's your business. Although you are not granted those facilities, somebody else has granted. Somebody else had granted. So you have to put the responsibility of recovery. If it's not recovered by you, you are find fault with the management for not working properly. The productivity is threatened. So management is risk. The same thing for the ailing business also. Okay, next issue is suspicious society. Society's attitude to business is failure is that almost always has been some misappropriation or fraud by the directors. This perception is difficult to shake off, and the bad name in the market is usually one of the biggest obstacles when engineering a complex business turnaround. If you don't know what that what's that? Golden key issue. Actually, what's the golden key issue? Other golden key means society fear separate fraud. Directors say fraud golden key collapse. Actually, Mukaddouni. Golden key. Before this problem took place with the golden key, that is the collapse. The overnight collapse only. Because RAM golden key company ka battery. A Vatten itself before that. Have you ever got a complaint from a depositor that his deposits were not given? His interest on the due date has not been paid? Any complaint prior to that? Well, we have come across. Only problem was there are certain accounting misappropriations were there, which was detected by the central bank, detected, and they published that information and tell that there's a fraud at this place. So it made people, the depositors, panic and rushed to take the money. So that's the fall of golden key. Now, if you hello, I don't know, there was an interview for this Lalit Kotalawala and one of the, I think this is IT. There was an interview after this, he was released. So that he was released, there was an interview. He told that I can pay for all the depositors if my properties are given back to me. Hyatt Hotel, that Selinco building, and all this housing scheme, a trillion housing scheme, to go by the government, no? Government acquired, no? And the funniest thing is, government acquired all these properties, but government didn't pay the depositors' funds. Put the blame on directors. So behind that, you'll understand what is it. So we don't know to talk about those things. But society now considering golden key and the Lalit Kotalawala is the biggest horror. Maybe other finance companies, you may have some sort of this thing, like this EAP thing, and there are certain things. Even till recently, their finance also doing very well. Recently, their finance company was full of trouble. And mostly due to their borrowings are at a high rate, there's no market to invest. Again, finance companies default in the Okay, right. So therefore, society is suspicious about directors and the government. Therefore, you cannot turn around the difficulties when this golden key and the name of golden key has been becoming what do you call a name, bad name in the market. Therefore, this company, they change some of their businesses. Now, for example, earlier, what do you call this one? CB, Then the finance company has been converted into Citizens Business Finance. In this, one unit has been set to Sri Lanka. Likewise, change the name and doing business continuously. So the name, Selinco name is a bad name. So earlier, Selinco Bank has to change Citizens Development Finance, CDP. Still doing good. So suspicious society, one of the issues where we can turn around are difficult for us. Improve our turnaround practices. What are the initiatives we should take as bankers? Change the attitude of bankers as the creditors to be business recovery as a specialized discipline and encourage banks to employ skilled workout specialists. Skilled workout specialists who can understand the issues of the turnaround and develop in them the ability to work with other creditors. Agad begin about you. Business recovery is a specialized discipline. And you have to work out as a specialist consultant, for which you have to develop yourself to understand issues and develop yourself, work out with other creators to do this change. Secondly, educate, train, develop specialized multidisciplinary business recovery professionals who could advise companies on strategies regarding revival, restructuring, and turnaround. Among ourselves, this is what you call today's need of our industry. Educate and train and develop specialized multidisciplinary business recovery. Multidisciplinary, not one specialized in one sector, multi. We should understand interbank structure, interbank activities, not only one area, not only credit, behind the credit, in other business activities, environmental analysis, varies. So multi-skilled visible professionals needed today. Thirdly, create awareness to the business community that companies which become sick could be nursed back to health. And that it is not always true that the sickness has occurred because of the cheating or fraud. Become sick and can be nursed back, put him back to the business. Only thing we have to understand the problem and the gravity of the problem. We can do the turnaround. Have new laws that address the special issues regarding business recovery and establish specialized courts managed by judges who have clear understanding of turnaround issues and businesses recovery process. This will need to be done through carefully organized education and training. What is the position in Sri Lanka? Special issues, the new laws address this recovery issues. We have. In 1980, we look at 1980, our financial reform systems. How many new enactments passed in the parliament? How many new enactments passed in the parliament to improve our bank's recovery? Right? 13 enactments were passed in the parliament. Number 1, Debt Recovery Act number 2 of 1990. Okay. Then Recovery of Bank Loan Special Provision Act number 4 of 1990. Amendment to the Mortgage Act. Amendment to the Trustees Ordinance. Amendment to the Agrarian Service Act. Likewise, there are 30 enactments passed the parliament to improve our recoveries, specialize, and established new courts. Commercial high courts was established. So all this thing has been done in Sri Lanka. Unfortunately, to what extent we are using those legal system in our recovery? That's the question. That's the question. Still, we file action under summary proceeding and civil procedure code. They are not using Debt Recovery Act number 2 of 1990. Still we are not using. Why? Why? Because our documents are still not up to the standard. 1990, Debt Recovery Act, specifically talking about Section 15, about the documents. Still, we are not, just after 25 years, still we are in the same place. Very unfortunate. Okay. Create awareness in the business community that the lines defining recovery, restructuring, liquidation, and necessarily diffused and impress upon the community that there's a need for them to obtain a proper understanding of these concepts in this day and age. Actually, this also prepared sometime, a long time ago, about 20 years back. There was a seminar was at in Galadari. They only discussed this one with some of the bankers about these ideas. Still, we are lacking among the business community. Define what is recovery, what is restructuring, what is liquidation. This concept has to be removed from our community, business community. So we have to educate our customers on these issues. Problem is, customers educate කරන්න අපි දැනුවත් වෙලා ඉන්න ඕන. To what extent we are aware of these things? That's a question mark. Since there are many emerging issues in this rapidly developing subject, some international standard norms and regulations should be studied, proposed, and followed in Sri Lanka. Especially our neighboring country, India, RBI, Reserve Bank of India, they have the large customers base of large, what we call large corporate clients. They have developed certain practices in India. So therefore, we also have to look into that carefully. We have to apply some of the principles in our industry. Okay. For example, in 2010, 2010, India has been passed the parliament and got a law that every facility over 5 crores, that's 50 crores, right? Every facility over 50 crores, if it's defaulted, it has to be classified on the day one as a special mention category. Day one, not waiting till 90 days. 50 crores and above. Right? And there are 3 segments for that. Special mention category 1, 2, and 3. Second month, 2, third month, also third month. And whenever transfer to NPA not performing advance, on the very first installment in due, the following day. And secondly, no other bank can entertain that particular customer for any facility. Should not entertain for any other facility. Thirdly, all the banks, we are given facilities to that particular customers who have been, account has been transferred to NPA in default of one installment. Default of one installment, transfer to NPA, that with that particular customer having accounts in other banks, and they are borrowed from the other banks loans. All the banks has to transfer their facilities to NPA. I was ready. These are things needed today to address these issues. And fourth one, all the banks has to get together, pool their ideas and try to do the recovery plan for that particular customer. So, isolate කරන්නේ bank customer here default කරාට එක bank එක isolate කරලා අනිත් bank එක දෙන්න යන්නේ නැහැ. It's prohibited in India. So these things we have to understand. But learn these things. Yeah. How the other countries are doing. Okay, let us finally remember that good entrepreneurs are few and are assets to the nation. Good entrepreneurs are few and are assets to the nation. Who is an entrepreneur? What's the difference between entrepreneur and a businessman? What's the difference between entrepreneur and a businessman? Businessman, right? Businessman do try to buying and selling and improve the profit by changing the value addition. But entrepreneur accepting a risk and convert that risk into business and earn profit. අවදානම ව්‍යාපාරයක් කරගෙන ඒකෙන් ලාභ ලබන එක තමයි ව්‍යවසායකයාගේ ලක්ෂණය. So good entrepreneurs are very few. Are asset to the nation. ජාතිය ඒගොල්ලෝ වත්කම. It is in the interest of the society to nurture them to health if they fall sick. So therefore, if any entrepreneur falls sick, put them healthy. Society to nurture them into the health. If they fall sick, it's the due society, interest of the society. Society. Let's develop good hospitals, efficient preventive and curative healthcare systems, and clever doctors in order to do so. Good hospitals, a bank. Efficient preventive and curative healthcare systems, a system and procedures has to be developed to meet that. And clever doctors talking about you in order to do so. This is not the end of the day. Okay, the role of the bank in business turnarounds. At the commencement of the business relationship, ensure that the business is properly studied. Credit evaluation is very important. Business evaluation, there are four components. Custom evaluation, business evaluation, there are financial evaluation, and non-financial evaluation. Risk evaluation, volatile evaluation. Business evaluation steps are right. Look at the cost structure, the industry norms, and accept whether they are acceptable level. What is the customer's P&L cost structure? What is the industry norm? If the customer is away from industry norm, we can advise the customer to bring those costs structure cost according to the industry norms. Carrier power due diligence is very important. Due diligence. Analyze the riskiness and the proper operations and the performance. Avoid over-financing or under-financing. Both are dangerous. For which I have given you the structuring of facilities. No over-financing or no under-financing. Need-based finance. Structure the facility. If the exposure is too large, go for syndication. If the bank, unbank cannot entertain a customer, go for syndication. Right? If there are several banks involved, look at the possibility of sharing the security on an equitable proportionate manner. If not, different banks will act different direction in the event of a crisis. Right? If a customer, for one same customer, if the number of banks involved and granted facilities, which thing is all the banks get together, put a common document, right? Common document where the customer's assets can be distributed proportionally among themselves. So this is another what you call the syndicate loan system. Syndication means what? That syndication? One borrower, number of lenders. One borrower, number of lenders. Lenders will get together and grant a facility to the borrower. That's called syndication loan. Syndication loan is given because single borrower exposure. One bank cannot involve because of single borrower exposure. Secondly, sharing of risk. One bank should not take entire risk. It can share with other banks. Why are we going for syndication? You can have proper documents, a mortgage bond call, concurrent mortgage bond, one document bond, and all the the investors, all the banks will get a proportionate equity security. So those things are for large customers we may apply. Work out the working capital requirement based on the properly studied operating cycle. Is the most crucial part on lending. Operating cycle is working capital work. Leave room for upward revision for facilities for financing growth of business. Whenever you design a proposal, keep 25% in advance for any further revision, upward revision on the during the course of the facility. It will avoid going to the management getting approval additional for additional facilities. You can have one document with that everything covered. So you don't release the funds unless otherwise needed by the customer. So develop these type of practices. Make provision for compulsory equity build-up by the way of cash retention and dividend restrictions. When you go for restructuring or business turnaround, dividend restrictions are important. Should not allow the customer to take the money back home. Okay, therefore, other thing is compulsory equity build-up by the way of we normally do the savings build-up. Okay, structure the facilities taking into account seasonal fluctuations of the business. Need cash flow-based projections. Very important. Be ready to be part of the business. Why? We are next to equity in the customer's balance sheet. While continuing business relationship, most important thing, visit, and visit. Visits are the best way to understand the business as it goes. Inspection, site visits are very important. Understand the business as it is. Any shortcoming come across, immediate action should be taken to rectify that. Document vital information for future reference. This is it. The other important. You go for inspection, prepare your inspection report and keep that in the file. where the successor can take over, he can start from that inspection report. And he can see whether the previous inspections, whether any variations that take place, whether the customer has been interested during a visit. Keep the hierarchy informed of the development, particularly the early warning signals. Do not hide the elephants. If you see something about the customer's behavior, any warning signal, immediately report to the management to take corrective action. Call for and go through financial statement regularly, particularly the management accounts. They are still good sources of information despite potential manipulation due to obvious reasons. Although financial statements are prepared for income tax purposes, still those are vital information for us. Keep an eye on the developments on the industry concerned. Anticipate changes in facility requirement, ongoing basis. Industry goals. If the industry is developing, of course, the customer also improves and he needs further facilities. We should be ready to entertain that customer in the future developments. Be quick to accommodate requests relating to temporary cash flow issues. Not solving such problems can lead to permanent losses that will be in turn create permanent problems. Okay, so very carefully understand. Temporary cash flow problems immediately solved. It does not mean that giving TODs frequently. No. Not solving such problems can lead to permanent losses. If you are not carefully solve the problem, then otherwise it leads to permanent losses. Ensure that the business always run at a desired capacity level, above the break-even level, without disruption to the production flow and without loss of capacity. If the client does not have proper controls and planning, the bank may insist on introducing them. Try to understand the problem as clearly as possible. Avoid generalization and giving reasons such as cash flow problem, liquidity problem, working capital issues, financial problems. These are outcomes. The issues are beneath the symptoms. Okay, we discuss this early warning signals. 20-80-20 rule. These are outcomes of the problems. Issues are different. So investigate to find out the cause. If the issues are temporary and easy to resolve, rescheduling of facility will help. I told you initially it's a short-term temporary measure. If the issues are bigger and nature of business failure, then the more comprehensive approach is required for structuring. When faced with the failure, consider the appropriateness of product restructuring, kill bad products, innovate products, and readjust the portfolio. Right? Product restructuring, kill bad products. So whatever facilities granted under personal guarantees, risky, and try to put into secured procedure. Restructuring marketing and buyer arrangements. Right? Marketing and buyer arrangements. Process re-engineering and productivity improvement. When it comes to peak, re-engineering process and productivity improvement may continue the business. More spending on research and development and on product development. Management restructuring insists on introducing the required management inputs if found to be lacking. Okay. In the case of governance issues, believe that the best corporate governance is not always the case. Don't get excited. Strengthen the monitoring process. Declare your concern that take up directly with the client. Your concern, take up directly with the client. If you are seeing something, when you're analyzing, monitoring, take up immediately. Formalization procedures required to ensure better corporate governance. What is corporate governance? It's the duties of the board of governance, board of directors, responsibilities of the board of directors, which is appeared in the Companies Act. Companies Act corporate governance will what are the requirements? Probably it is still better to recover the business, so go for it. A number of reasons may result in company failures. Bank or financial institutions should ideally work towards avoidance of failures while commencing and continuing business relationship, and also when faced with failure. When customer has problem, closely move with the customer to identify his problem and try to solve it. Don't run away from the customer. It is much easier to kill a business to recover the money from the breakup, value of asset, but almost all the stakeholders are bound to lose. Right? Therefore, a win-win approach of restructuring the firm is beneficial to all parties. Right? Bankers' approach to managing business relationship play a vital role. We discuss 4 different approaches. While restructuring is a far better solution to all parties, it is riskier in a way because the banks may have to infuse more funding. Right? There's a risk like we discussed earlier. The bank has put money, additional funds, and it will become a risk. The owners must cooperate by giving additional commitment in such instances so as to have a balanced solution. Okay, a goal without a plan is just a wish. At 20s, that should be a goal. And there should be a plan. So do better in restructuring and business turnaround. Okay, right. Any questions? Okay, if there's no question, we'll wind for the day. So we'll have another session next week and discuss. This is just joined, no? Okay, we are close already. Anyway, so next week we'll discuss the other options available as compromise settlement and liquidating of secure assets. Okay, right. Thank you very much.